One of the things that always excites me about the Australian share market is the decent degree of dividends that are paid by Australian companies. Now, of course, there's a lot of debate about this. Australian companies do pay out more of their earnings as dividends than overseas. So that's great for us as shareholders, and I'll come to some reasons for that. But obviously some are concerned that flow of dividends is actually a bit of a drag, that it means there's less growth potential locally, that companies are paying out dividends rather than paying their workers, rather than investing in CapEx for the future. I want to scotch that up front. If you look at the history, the dividend payout ratio is not that out of whack with the historical average. The reason it's gone up perhaps a little bit in recent years is because resources companies that used to not pay much in dividends are now paying pretty decent dividends. And it's very hard to argue that they should be investing more on CapEx for the simple reason they've just had a CapEx boom with the mining investment boom. So I don't think things are that out of whack, and I don't see any evidence here that dividends are slowing down the rate of business investment in Australia. The reason business investment is constrained is because companies have been cautious following the GFC, following the surge in the Aussie dollar that made many of them uncompetitive a few years ago. So you really need to fix those sorts of things, make business more confident again, then you'll see more CapEx. But in terms of dividends, I'd have to say they're a good thing. And there's several reasons you should like them, and I'll only go through a few of them here. The first one is, if you look historically, companies that pay out decent dividends tend to have higher returns, tend to generate more profits. Why is that? Because they're not wasting the money. Often when companies retain their earnings, or too much of their earnings, they waste it on projects that are nothing more than glorifying the CEO or something like that. Hubris takes over, a lot of wasted money. So it's better to pay out those dividends. If you want the money for CapEx, then have a dividend reinvestment plan and leave it in the hands of the shareholders to see whether they want to tick the box or not and believe you. Secondly, I always like that saying, a bird in the hand is worth two in the bush. Go back historically, roughly about half the return you get out of Australian shares has come from dividends. And I like that because it's like a down payment on the future. You're not relying on the capital growth as much because you already got a bird in the hand, so to speak. You've already got some down payment on your total return. Thirdly, the fact that companies pay decent dividends gives them a little bit of confidence that the earnings are real, they're not made up, and that there's confidence about the future. And finally, and this I think is very important for Australian-based investors, they provide a good source of income. You know, the dividend yield on the Aussie share market around 4.5%. With the franking credits, you're pushing up to around 5.5%, 6%. That makes the share market, and I've got to say here, have a well-diversified portfolio of shares. Don't just rely on one or two, because you never know. The company you invest in for the dividends may not pay that dividend indefinitely. They may cut it. So always have a well-diversified portfolio. But that yield is actually quite attractive at a time when the cash rate in Australia is just 1.5%, likely falling, and term deposit rates are around 2% and likely also falling. So bottom line is, I think dividends are great. I think it's very important going forward that we don't mess with the dividend imputation system, because that does help reinforce the payment of dividends in Australia. But it also, I think, corrects a massive distortion that would otherwise occur and did exist prior to the 1980s. And that is where company earnings are taxed twice. Once in the hand of the company as company profits, and once in the hand of the shareholders. So I think it's very important that we stick with our dividend imputation system in Australia. But the bottom line is, when you're thinking about investing, make sure you do have that focus on dividends, because they are very important and they do give confidence about the future. And in Australia, at least, they provide a pretty good yield.